Hey everyone! Today we're continuing our chart reading practice, building up pattern recognition. Let's take an asset, the Australian dollar against the Japanese yen. We pick a random bar in the history and land on 2009. That works for us. Let's try to determine the direction of the asset, its trend. What do we see? Some aggressive selling. A move this one-sided almost always gets at least some correction, or, on the higher time frames, this could be a liquidity grab and a buyback. So it makes sense to look at the overall trend. Broadly, the trend was down, and the reversal, the break, happened here. We also see price here, again in a corrective move. So we can take this trading range and note that overall, price is now approaching the premium zone. But until price, even in this corrective move, shows signs of seller strength, and those signs only appear after a change in delivery. Right now, delivery on the asset is moving upward, and the most recent local trading ranges point to buyer strength. As long as the low here holds, price will continue its move up. So, relative to the current position, let's run some analysis. We see the most recent trading range, and within it, price got a reaction here. A reaction off the weekly balance. The first reaction was in this candle, and here we had a rejection block zone. Price keeps holding above it and forms the intention to continue toward the established high. Let's mark that as our target. Here it works out to the weekly FBG. You could say price is reacting off the equilibrium zone, not quite the discount zone, but still. And the balance that sat in equilibrium is showing buyer strength. So price is now forming the intention to continue the move. So we can answer the key questions. Where is price? The move is coming off the discount zone. Let's note that's the discount zone of the weekly trading range. What is it interacting with? We already established that, the weekly balance. And where is it heading? Toward the high of the weekly trading range. So, our bias runs from point A to point B. The trigger was the weekly balance in the equilibrium zone. Point B is the established high of this trading range. Let's lock it in. At the interaction with the weekly balance, the sign we have is a weekly rejection block. Now the daily zone, I wouldn't mark it separately since it overlaps heavily with the rejection block, but there's also a daily MTV zone there. So the weekly zone is basically enough. Let's also check the narrative through the trade model. That's our own indicator. You'll find a link to it in the video description. It shows market structure, and I want to compare how the indicator reads the structure against the hypothesis we've formed. What do we see? Like I said, there was an uptrend. It broke with these impulse moves, and now we're in a correction. Possibly just a manipulation on the higher time frames. Let's look at the local picture. The correction started from this point. On the daily, what do we see? Like I said, there's no change in delivery. The low holds, the high gets broken. So this is essentially a continuation toward the next pool of liquidity. Price came into an imbalance and isn't getting an aggressive pullback. This trading range is holding. Let's see where this hypothesis leads. We can see that, after another manipulation, price still delivered to the target we set. The imbalance we based the move on held as a zone and drove price to the established high of the trading range. On the lower time frames, I've got the 4-hour here, the 3-hour is available. You could work this move or hold it as a swing position. That's it from me. Thanks for watching. Drop a like, subscribe, and you'll find more on our site and Telegram channel. Good profits, everyone. Take care.